Good evening, students. Very welcome, all of you all, to our LVRC classes. Students, this is the most important part of all your study curriculum because here I'll try to address not only the revision aspects from the topic, but also I'll try to cover up all your queries. If there are any doubts which you may have encountered while studying, similarly, if there is anything which you are not able to clear when you are studying by yourself, sorry. So students, I wish that you all be present live so that during the class itself, all your pointers relating to the topic, relating to that particular chapter which we are dealing with, and even the other chapters can be cleared. So today we are going to cover three topics. First is supply, second is charge, and third is place of supply. Now, generally what I prefer doing is I take up this test your knowledge questions from each chapter so that it is a bit more interactive, and also all the important concepts are covered. But besides this, if you still feel some part of any of the theoretical part needs to be discussed, needs to be understood by you, please put it across to me. So I'll go through the test your knowledge questions. You have both the questions and answers in the module. We'll read through both of them so that through these question answers, we will try to connect to each of the concepts in that particular chapter. So once again, welcome to all of you present here. And with this, let me start. In case anybody have questions in particular to any of these pointers, these topics, you may put it across. I'll be happy to first address your questions, and then I may take you through the question and answers. So I'll also briefly run through this revision part, which is in the form of let us recapitulate. So we have this let us recapitulate given towards the end of each topic. So I'll run through them so that all broad pointers are covered. And my endeavor would be to take you through the question answers for your better understanding. Fine. So I'm starting with the pointers. In case any of you have any particular question, any particular pointer which you want me to cover in detail, please do let me know. So we start with this word, with this concept, which is supply. So before GST, we had different indirect tax laws, as you all would be knowing. We had the sales tax law called as VAT. We had the central excise for manufacturing. We had the service tax for the purpose of collecting tax on supply of services. Now, all these had to be merged into one single concept. So we followed the international taxation analogy, and from there we borrowed this term supply. Now, supply in English has a very restricted meaning. However, you have to understand, students, here under the GST law, supply has to be used in a very specific and a technical sense as is expected by the law. So firstly, as you all know, in taxation laws, you have something called as the taxable event. What is this taxable event? Taxable event is that activity, that transaction on which that particular tax is attracted. So for example, in case of erstwhile sales tax law, undertaking the transaction of sale was a taxable event for sales tax, that is VAT. Similarly, providing service was attracting tax in case of service tax, and manufacture was attracting the tax in case of excise. Presently also, when you talk about income tax, the activity of earning income is the taxable event for income tax. Now, on similar lines, the activity which attracts tax under indirect tax law, present GST law, is the concept, the term supply. Now, in order for any transaction to be termed as a supply, there are some important parameters. Firstly, what is a supply? So supply basically, students, includes all these activities which I will use a term commercial transactions. So you have sale, you have barter, you have transfer, you have exchange, you have relinquishment. We have all these terms which are commercial transactions. To put it in a different word, wherever anything belonging to me, I am giving to you for your commercial use, that is a supply in a very generic sense. Now, from technical perspective, what does Section 7 of the GST Act, the CGST and the SGST Act says? Section 7 says that what will be a supply? Supply will be one of the forms of supply. What are the forms? These all are transactions: sale, barter, exchange, giving away, etc. Second, they say this transaction should be of goods or service. So what is very important is when you have performed anything which is a sale, which is exchange, which is barter, it should be of one of the items, that is either of goods or of service, or a combination of two, which is goods and service combined. If either there is no transaction of sale, barter, exchange, there can be no supply. Second, there is a transaction, but the transaction is of such a thing which is not treated as goods, which is not treated as service. Example, shares. So we all know today there is no GST whenever somebody is selling shares or debentures or mutual funds. Why? Because share, debenture, mutual funds, these are regarded neither as goods nor as service because they have been kept outside the definition of both. So the second requirement is, so there should be a transaction. The transaction should be of goods or service. Third, this transaction should be for some consideration. Now, what is impliedly the meaning of this is, if you do anything for free, that cannot be taxed, and the simple reason is it cannot be a commercial transaction then. However, I'm sure since you all have studied this topic earlier, you would be knowing this, that under GST law, we have three schedules, schedule 1 to 3. Schedule 1 has carved out specific transactions where those transactions are to be treated as a supply. They are deemed to be a supply even though they are done free. So, primary condition, there should be consideration, which in other words means free transactions will not be supply. Exception to that, those transactions which are covered in Schedule 1. And then comes the another condition, that these transactions should have been entered into in the course or furtherance of business. Now, what it means, students, be very clear. See, whatever I am discussing now, this is the basis of all the questions that we are going to handle in few minutes to come after this, and even in exams, because many times we directly jump to the final calculation part. However, at final level, you will be tested more on the very crucial basic components of supply, like consideration, like this presence of furtherance of business. Now, what it is, I'll give you a simple example. You have a laptop with you. Maybe you have joined this class through your laptop only, or maybe through your mobile handset. Now, tomorrow, when you want a better model of laptop, a higher end model, you go to the shop, and there is a very good probability that what you will do is you will sell off this old laptop as a second hand, and then you will select another model and you will buy that model. Or you may even give it to the same shop, this laptop, and you can ask the shop to give you a higher end laptop and you can only pay the difference. Now, one is sale, one is exchange. Both are one of the forms of supply. There is goods because there is laptop, there is consideration, but still this transaction will not be taxed. Why it will not be taxed? Because of the missing component, that is, you have not done this in course or furtherance of a business. Selling laptop is not your business either directly, neither it is subservient to your main business. Now I'll change this example. Today I am also using laptop. I will go and sell this laptop in the same fashion because I want to buy a higher end laptop. When I will do this, for me, this condition is getting satisfied. Now you'll say, sir, how? I'm not in the business of selling laptop. I'm in the business of providing professional services. So I'm in the profession of chartered accountancy. In this particular case, even though my direct business is not sale of laptop, but since this laptop is being used for the purpose of my business, so when I sell any goods which are part of my business, like my assets of the business, in future, that will also be deemed to be in the course or furtherance of business. So as I said, either it may be my direct business or it may be subservient to my main business. So this is subservient to my main business. That is why the term is in the course of business. Had they wanted to cover only those people who are in the actual business of sale purchase of laptop, they would have said in the business of sale of laptop. But the term uses in the course of business. So this term, this phrase in the course of has a very wide import. So as you know that these are the key considerations, then there are some specific transactions which are treated neither as supply of goods nor as supply of services, which we call as Schedule 3 transactions or no supply transactions. So basically, these are those transactions which the lawmaker, for the time being, do not want to tax. So they have put it in Schedule 3, which we call as negative list or as no supply transactions. So basically, these are the key pointers that you should keep in mind when you are addressing or when you are testing any transaction to be a supply or not. So supply should be with consideration in the course or furtherance of business. Supply between a person and its members or constituents for cash, deferred payment or other valuable consideration will also be a supply. So where a cooperative society or any club is giving goods or services to its members, that will also be a supply. Further, import of service. Now for import of service, there is this exception that even though you have imported it for your personal use or for your business use, both will be treated as supply. Then we have some activities which are provided in Schedule 1, where it will be treated as supply even without consideration. And then you have Schedule 2, which is the classification schedule, where you have to determine the nature of supply, whether it will be supply of goods or supply of service. Again, this point is going to be very important at final level. And then you have the exclusion, that is Schedule 3. So the first clause in section 7.1, that is clause A, deals with the regular forms of supply, where there is one of the form of supply. It is for a consideration, it is of goods or service, and it is in the course or furtherance of business. Then you have this recent amendment which says that when a club association is performing any activity or transaction with its member and it is for a consideration, this will be deemed to be a supply. Then you have clause 1B, which deals with importation of service, where it says even if it is done in the course or even if it is done not in the course, that is for personal use, still importation will be taxed. Then 7.1C deals with those transactions which will be deemed to be a supply even without a consideration. And for this 7.1C takes you or connects you to Schedule 1. In Schedule 1, you have these transactions which are deemed as a supply even without consideration. So first transaction is you have a business asset which you are permanently transferring or disposing. So you are giving it as free. You are donating it. So in my case, let us say my business laptop, I'm either selling, then it will be 7-1A. Second, I'm not selling it. I'm donating it to some school or a trust for being used for the children who are studying there. Then in that case, even though I have not sold it, I've given it away free. But if at the time of purchase, now this is a crucial condition, students. If at the time of purchase of this laptop, if I had taken the input tax credit, then at the time of giving it away free, it will be deemed to be a supply. So for business assets, Schedule 1 says if at the time of purchase you had taken the ITC, then at the time of giving it free, it will be deemed to be a supply. Now this is going to be an important part. What is this? So in GST law, there are two concepts. One is related person, one is distinct person. Related person is defined in section 15, which includes blood relations plus business relations. We are going to see the definition when we go to the valuation chapter. Second is distinct person. Students, be very clear with this concept because this is one of the most crucial concepts of the GST law. You'll get the reference of this concept in multiple chapters. Distinct person means what? It is the same person. So I'm Vishal Poddar, chartered accountant, registered in Maharashtra. This is one person in the eyes of GST law. Now, if I have my office or my branch in other states, let us say West Bengal, let us say Karnataka, let us say Tamil Nadu, let us say Jammu and Kashmir, let us say Gujarat, let us say Rajasthan, let us say Delhi, law mandates me to take separate registration. So it will be Vishal Poddar only, but it will be Vishal Poddar Delhi, Vishal Poddar Gujarat, Vishal Poddar Rajasthan, Vishal Poddar West Bengal, Vishal Poddar Tamil Nadu, Vishal Poddar Karnataka, and Jammu Kashmir. Now, in the eyes of general law, in the eyes of income tax law, all these are one person, one legal person, Vishal Poddar. In the eyes of GST law, these are all different persons only for the purpose of GST law. So this is what is the concept of distinct person. So who is a distinct person? Same legal person having separate registrations in different states, or maybe within the same state, I have opted for separate registration for my different branches. Each of these separate registration of the same person is said to be distinct person. Now, when between related person or distinct person, there is supply of goods or service without a consideration in the course of business, it will be deemed to be a supply. Here there is one exception. Now employer employee are treated as related persons. If employer is giving a gift to the employee in a financial year and the value in aggregate is not exceeding 50,000, that has been excluded and treated as no supply. Other than that, in all cases, it will be deemed to be a supply. Then comes supply between principal and agent. Remember, this is only limited to supply of goods. Here, services are not covered. So where principal send goods to agent or vice versa, agent send goods to principal, and all this is done on behalf of the principal. But important thing is where principal is sending goods to agent, agent is selling the goods on behalf of the principal, but the agent is issuing his or her own invoice. In such a case, the transaction between principal agent and here agent principal will be deemed to be a supply. This is limited only to goods. And then comes again importation of service. Now here importation of service is where your own entity who is sitting outside India or your related person sitting outside India is supplying you service. So it is again not covering goods. Here it is covering only service. So you are the person in India and your related person, your entity or branch outside is supplying you service. And this is done in the course or furtherance of business. This import of service is deemed to be a supply, even if done free of cost. So for import of service, these are the different possible scenarios. First scenario, where import of service is for a consideration. If it is done in the course of business, it is a supply as per 7(1)(a). If it is not done in the course of business, still it is a supply as per 7(1)(b). Where import of service is without consideration from your related person in the course of business, it is a supply as per 7(1)(c). So technically import of service is becoming supply under all the clauses. Only where import of service is done without consideration, and in other cases, other than from your related person or distinct person outside India, in that case only it will not be treated as a supply. Then you have this schedule 2, which classifies the different transactions into supply of goods or supply of services. And then we have these some notified supplies, which are to be treated neither as supply of goods nor supply of services. Now what it covers: first, services which the employee gives to the employer in relation to the service contract or the employment contract. In short, there will be no GST on salary and wages, because again, salary and wages, what is the service going? It is the job or the employment service. Second, services by courts or tribunals. This is outside GST. Then services performed by members of parliament or those persons who are holding a post which is given to them by the constitution, or services which are provided by chairpersons, members, or directors in a body established by the central government, state government, etc. These three cases, again, it is treated as neither a supply of goods nor service. Next, any services performed for the deceased person, like funeral, burial, crematorium, and the mortuary services where the body is kept before performing any of these things, and even the transportation service where the body is taken from one place to another. All these are kept outside. Then sale of land or the plot of land and sale of completed building. So this part, para B, etc., means sale of completed building. So sale of land or completed building is also kept outside. And last is whenever there is transaction of actionable claim, it is outside GST. However, if the transaction is of specified actionable claim, specified actionable claim means what? Lottery, betting, gambling, online gaming, casino, horse race, all these are specified actionable claim. That is what is in GST. Next, where the goods are sold by a person in Bangladesh to you and you have to sell it further to US. But what you are doing is you are asking the Bangladesh person to directly dispatch it to the US person. So in your books of accounts, you have a first purchase transaction from Bangladesh, then a sale transaction to the US. So commercially, the goods are sold to India, that is you are purchasing it, and then you are further selling it to US. But this is commercially. Physically, the goods are not coming to India. There is out and out sale, that is on your instruction. The Bangladesh person is directly sending the goods to the US person, but the billing is done through you. Such transactions are out and out sale. In the language of law, it is a supply of goods from a place in the non-taxable territory. So in my example, it is Bangladesh. And further, it is to another place which is in non-taxable territory, which is in my example, US. So such goods are being sold in my name, but they have not entered India. Such transactions will not be leviable to GST. Next, where you have imported goods and the goods are kept in custom warehouse. Now, while the time the goods are in custom warehouse, we'll study this in detail in the custom warehouse provisions. There is no customs duty attracted. Now, before you clear these goods, that is before it attracts custom duty, during the time they are in the warehouse, if you sell the goods directly to another person and they have not been cleared by you, that is before you are clearing it from customs, then the sale of the warehouse goods is outside GST. Similarly, where there is a high sea sale. What is a high sea sale? So you are importing some goods from the UK while the goods are still outside India. So the goods are still outside India, that is, they have not yet come to India. That is, before they coming to India and before you clearing the goods in India, you have sold these goods. So while the goods are in transit, you have sold these goods. How you have sold these goods? By endorsing the document of title. So whatever was your purchase invoice, I have endorsed it and put it in your name. And now you can go and clear the goods. This is called as a high sea sale, that is also kept outside. And then comes these two activities which deals with reinsurance. So whenever there is reinsurance or co-insurance, then there will be no GST between the insurance companies. So GST will be leviable only to the final insured, but between the insurance company, there will be no GST. I hope this is clear to all students. Chalo, anybody has any questions up to this point? And then the last concept is the concept of composite and mixed supply. So this concept will apply where two or more things are supplied together. These two or more things may be all goods, maybe all service, or a combination of goods and service. Now, whenever there is a combination of goods or combination of service or a combination of goods and service, so how to tax this composite or a combined supply? So for this, the law says determine the nature of supply, whether it is a composite supply or it is a mixed supply. And depending upon that, if it is composite or mixed, you decide how it will be taxed. So if it is a composite supply, it will be taxed at the rate which is applicable to one of those items, which is the main supply. However, if it is a mixed supply, it will be taxed at the rate which is the highest rate out of all the supplies. Now you'll say, sir, when a supply will be composite and when a supply will be mixed? The answer is this combo, what you have made, whether this combo is done normally, naturally in your business, means even your other competitors are doing that. So whatever business you are in, whether making such combo packages is normal, is natural. If yes, it is a composite supply. If no, it is not normal, it is not natural to make such combo, but you have done it in your business, then it is called as a mixed supply. Fine. So I've done just a brief run through over the concepts. Now I'll be taking you through different question answers. These question answers are obviously based on all these provisions. Plus, these question answers will cover important circulars or some important judgments that have been declared till now. I will go through the questions. We will also go through the answers because they are already present in your module. The purpose is one, to understand the important circular, important case law relevant to that particular point. So that will get revised. Two, I will also direct you how these questions have to be answered. Fine, students? Chalo, should we start? Acha, anybody? Any queries? Yes, you may raise your hand, you may unmute yourself. Yes, everyone present over here. I can see some familiar names. I can see some new names. So anybody having any questions? Anybody having any pointers, queries, inputs? You may raise your hand. I'll unmute you. If you want, you can even put it in chat box, but I'll prefer that we have a direct live discussion. Yes, students, anybody? No one? No queries? Okay. Chalo. So we start with the first one. See, I'll also explain you. See, the purpose of going through is not simply knowing the answer that is there in the module. The purpose is one, revising those important circulars, case laws. Two, another purpose is how to read and interpret the question is the crucial thing in the exams. Many times I have seen Students know the law, students know the concepts, but they are still not scoring marks. Why? Because their approach, understanding of the question itself is wrong. So we'll try to develop that also. Now, what is the point? Satyam Printers is a printing house registered under GST. It receives an order for printing 5,000 copies of book on yoga and meditation, authored by a well-known yoga guru. So simple, practical example. So you are this printing press. Now you are given this order, work order, order of printing some booklets. Now what this booklet will contain? This booklet will contain some important aspects about yoga and medicine. Importantly, the content of the book obviously will be provided by the yoga guru. So you are only the printer. You are not the content creator. This is the distinguishing point. It is agreed that you, that is the Satyamev printers, will use its own paper to print the sent books. Now, what is the challenge? The challenge is here two different supplies you are going to make. First, you are going to use your own paper. So there is goods involvement. Plus, on that paper, you are going to do the printing. Before that, you will do the entire designing, etc. And that will be printed. So this component is the service component. Now the question is, you are required to determine the rate of GST applicable on the supply of such printed books by the printer, assuming that the rate of GST applicable on the service component is 18 and the goods component is 12. Now students, please understand and appreciate this point. What is the relevance of this question? We just discussed that there can be a concept of composite supply. Another concept can be of mixed supply. Now, this question is exactly targeting that. Now, what you are supplying has an underlying item, which is goods, which is the paper. Whether you will treat that as your principal supply, or since your main business is doing printing work, as you are also called as a printer, so whether the printing component, that is a service component, is your main supply. So the whole discussion, whole challenge is revolving around this. Now for this, if I take you to the answer, now in this, as I was saying, you should first understand what the question is about. So question is about what should be my underlying principal supply, whether it should be paper, that is goods, or whether it should be the printing service, so that I can determine the tax rate. Now, how to present your answers? Students, whenever you are addressing such type of questions, now such type means what type? I call these as case study based questions. So one is you have plain theory question, second is you have direct practical questions, and third, which is very common at final level, you have the case study based questions. These are case study based questions. How to address them? So once you have understood the bottom line, that this question is based on one main concept, that is composite versus mixed supply. So how you should start your answer? Your answer should first discuss about the relevant provision. So as you can see in the answer, firstly, the discussion is about composite supply. Then if there is any applicable circular, if there is, fine, circular, case law, whatever. So you have to first refer to the relevant legal aspects like the law, main act, maybe rules, any notification, any circular, and if there is any case law. After that comes the most crucial part, the second part, where what you are required to do is whatever relevant law portion you have written, you have to interpret, you have to analyze how that law portion applies to the given facts of the case. So in the second part, when we'll read this, we'll identify that whatever law portion you have written, that is, you have explained composite supply. So now we are trying to match our facts of the case to this particular transaction, applying the law, whether we are satisfying that particular law point which you have written, that is whether it is a composite supply or not. Similarly, since you have also quoted a circular, you have to also apply the facts and you have to bring out or explain in the paper whether or not that circular or any para of the circular is applicable. And then finally, you give your concluding answer based on your interpretation of the act, the law, and the circular notification, whatever you have quoted, that will be the final part. So in three parts, your answer should be written. First, reference of the relevant law. Second, analysis of the facts and application of the facts to that law. And third is the final concluding answer. Many times I have seen people only writing this last part. Now, this question is of 3 to 4 marks. Writing only the last part, that is a concluding part. Maybe in this concluding part, you have referred to the composite supply definition section, but that is not sufficient. You'll get only 1 mark. So see the flow. So first is the relevant law portion. Now we all know there are two supplies involved. So we have to test whether it is composite or mixed. So composite has been defined. It says Section 2 Clause 30 defines composite supply to mean a supply made by a taxable person to a recipient, which is consisting of two or more taxable supplies, which may be of goods or service or a combination of both, and which are naturally bundled and supplied in conjunction with each other in the ordinary course of business. So, what is definition of composite supply? Where two or more taxable supplies of goods services are supplied in a combination, that is together, and this combination is a naturally bundled combination, and it is supplied in conjunction with each other in the ordinary course of business. This is the main part of composite supply. So when two or more things are combined naturally, that is, this is done by everyone or majorly everyone in our industry. This is how this particular thing is sold. And most important, this combination is in the ordinary course of business. And most important point, out of different goods or service involved, only one of them is the main item. This is very important because if there is more than one item which is main, it cannot be called as composite. Now, this is the concept of composite supply. So that is also revised through this. That is why I paid some emphasis on this. Now comes the most crucial part. Now for this transaction of printing press, we already have a circular in GST which has clarified. Now this clarification is very crucial. It has clarified that supply of items like books, pamphlets, brochures, envelopes, annual report, leaflets, cartons, etc. Where what is important is it is printed with logo, design, name, address, or other contacts which is supplied by the recipient of such printed goods. These are composite supplies. So, firstly, what does the circular says? Items of printing industry will be treated as composite supply. Now, the main part. What is the main part? The circular further clarifies that in the composite supply of printing of books, pamphlets, annual reports, etc., where only the content is supplied by the publisher or the person who owns the usage right to the intangible inputs, while the physical, including paper used for printing, is belonging to the printer. The supply of printing of the content supplied by the recipient is the principal supply, and therefore such a supply will constitute supply of service. So this is the crucial part of the circular. What is that crucial part? So in a printing scenario, the printer is using the paper, but the content which the printer is using is supplied by the recipient. So this content is supplied by the recipient and therefore such a supply will constitute supply of service. So this is the concept of composite supply. So the paper belongs to the printer, still it will be treated as supply of service. And accordingly, in this present example, now we are giving the concluding part. The supply of printed books by the printer is a composite supply. Further, the principal supply will be the supply of printing service and hence taxable at rate of 18%. Correct? I hope this is understood and clear to all. Students, anybody, any queries? No? Great. Now I have a query put in here. The query is, sir, do we have to mention circular number in the exams? See, students, I would like to inform you one very important aspect. At final level, writing question number is compulsory. First point. Second, this question has a direct relevance or dependence on a circular. In fact, the answer that we have derived is directly given in a circular. Now, whenever this is the case, you should even write the circular number. So, answering you, beta, circular number is important to be written. The number will carry at least half mark in the exam, minimum half mark. So, to the extent possible, try to remember. See, we have 100 plus circulars in GST law. You have to only remember 20-25 of them, which are given in your module in respective chapters. So it is not expected that you learn each and every circular number. Only the limited ones which are provided in your module, at least learn them. Fine. Now, Sudama Associates, registered supplier, disposes the computers owned by the business without consideration, and it has not claimed input credit on such computers. Examine whether the disposal of computers by Sudama qualifies as deemed supply. Now, we just few minutes back discussed Schedule 1 in brief. Now you have to answer this question with respect to that Schedule 1. Now see, whenever the word disposal is given, what is disposal? Disposal means giving away, disposing of. And it is obvious that this is done without a consideration, but they have still clarified that this particular Sudama associate has disposed of the computers owned by them without consideration. So they are not charging. So it is like giving away, donating. Now the question comes whether giving away or donating is a supply. Now for this, you have to go to the important limbs of supply. So one of the limbs of supply is that there has to be a consideration. Now, when you are giving away, when you are donating, when you are disposing, there is no consideration. So as per the general meaning of supply, this should not be a supply. However, we discussed that there is one exception in 7.1c, which says that there are few transactions in Schedule 1 where even without consideration, the transaction will be deemed to be a supply. Now, in that particular Schedule 1, the very first entry is dealing with this. What is this? You have a business asset which you have permanently transferred or disposed of. That is covered in Schedule 1 and deemed to be a supply. But over there, if you remember, we had discussed that the most important condition is that you should have claimed input tax credit. Only then it will be deemed to be a supply. Now, in the facts of this case, yes, you're right, Smriti. So Smriti has correctly pointed out in the facts of the case, since you have not availed the ITC, you are not satisfying the conditions of Schedule 1, and hence it will not be deemed to be a supply. So see how to go ahead. So the question is about whether it is a supply or not. So we go to the definition of supply and we refer to the main component, which is 7.1c, which covers no consideration items. However, this requires to be read with Schedule 1. So you are referring to Schedule 1. Now in Schedule 1, you need not reproduce entire Schedule 1. You have to only refer to the relevant one. So this is the relevant. And in this, the most important condition is this would be treated as supply provided the ITC was availed. Now, once you write this, now you have to apply this to your case and you have to mention that since in our case ITC was not availed, Hence, the condition of this Schedule 1 entry is not satisfied, and hence it will not be regarded as the supply. Correct? I hope this is clear, students. Okay. Great. So now we go to the next case, students. So Shivaji Private Limited, registered supplier, supplies the following goods and services for construction of building and complexes. First, excavators for required period at a per hour rate, manpower for operation of the excavators at a rate which is per day, soil testing, seismic evaluation at a per sample rate. The excavators are invariably hired out with operators. Similarly, excavator operators are supplied only when the excavator is hired out. So now they are giving the details of what are the different types of activities which are provided. So Shivaji Private Limited is providing following services at a construction site. So one is the excavator. So it is a type of machine which is done for excavating the mud and the rocks. It is done along with the operator, and the charges are of the excavator machine also, which is per hour, and of the operator also, which is per day. So higher charges of excavator is given, and the payment for supply of manpower for operating this excavator is also given. Further, another service which is given is in soil testing, and again the charges are given. Now you are required to compute the GST payable. You are given the rate. Rates are hiring of excavator, you have to assume at 12%, and the remaining two services you have to treat it as 18%. Now here again, students, the main question is, this person is providing three different services, whether they have to be treated as one, that is composite, or they have to be treated as independent, and in case you are treating it as one, whether the rate of one service will apply or the rate of another service will apply. So in this regard, firstly, even though there are three services, the third one is an independent, so there is no confusion about that. It will be taxed independently. The only question is about the first two services, because it has been specifically given that the excavators are hired along with the operator. So the machine is given, and along with that, the driver or the operator is given who will operate the machine, which is practically the case. Now, whenever you are giving the machine with operator, which rate should apply? That is the basic question. So here, yes, Smriti. So that is what I said. So soil testing is altogether a different service. So it is to be taxed independently. There is no question about that. The main issue is about the other two services, Smriti. Yes, Swaminathan. So now that is the point, whether this is composite, and if it is composite, that is the excavator machine and the operator, then which is the principal supply, whose rate has to be applied. So when we look at this particular answer, you will find that they have applied 12% rate even to the manpower supply service, which is the driver or the operator service. This anyways is independent, so this we never had a question. This was only the question. Now here, students, you'll have to understand one thing. See, when you are providing a machine like an excavator, nowadays you'll find a lot of development work going across everywhere. So even in your city, near your house, near your college, near your office, you'll find some of the work going on. So you'll find different machines which are being used by these road contractors, etc., either for drilling the road or for doing the excavation, or you have those machines which lift the material from one place and keep it to another. I mean, all these machines, which are all generally battery operated and mechanically propelled, which are also like vehicles, you'll find they are like vehicles. So there is a driver who is driving as well as operating that machine. Now, this is what is crucial. Now, many times The charges for both the machine and the driver is separate, like in this case. Now, how to tax it? Now, here comes again our concept. So, since excavators are invariably hired out along with operators, and excavator operators are supplied only where the excavator is hired out, it means it is a case where combined two things are given. Now the question is whether it is a composite supply. Now we had already discussed the definition of composite supply above. You have to repeat it here, but I'm not again explaining that. Now you'll have to first find out whether giving this both things together is naturally bundled. The answer is yes. Why? Because practically, if you'll see, you will not only take the machine, because not any person can drive that vehicle and operate that vehicle. It is a very technical equipment. So you require specifically trained persons to use that particular machine. That is why the person who's providing those machines is also having those specifically trained persons who knows how to correctly operate that machine. So generally giving both together is the normal trend in the business. It means it is naturally bundled. It means it is composite. So that point is done. Now the second question comes, if it is composite, then out of both, which is the principal supplier? Now again apply logic, students. Machine and operator, which is the main supplier? Now we'll say, sir, how to identify? I'll give you an important trick. The trick is look at it from the recipient's point of view. What is the main intention of the recipient? What the recipient mainly wants? That is always the main supply, the principal supply. So what is the main intention of the recipient? The recipient wants the excavation to be done. So excavator, that is the machine, is the main supply. Operator is complementary to the machine. So my intention is not getting the operator. My intention is getting the machine because I want the excavation work to be done, which is done by the machine. Yes, it requires out. But for me, for the recipient, the main intention is to get the machine. So this is how you can identify which one is the principal supply. So I just thought of giving you a trick, a clue how you can identify the principal supplies. Yes. Going back, now Mr. Kanchilal Adani is an oil exploration and production contractor. He is registered in the state of Gujarat. He entered into a production sharing contract with the government, wherein he gets a license to explore, exploit, and sell the petroleum crude natural gas from the government in the Aliabet oil field in lieu of royalty and a share in petroleum profit. So see, this is a very specific contract, students. So nowadays we'll find that in India there are specific areas where there are some oil deposits, deposits of natural crude oil and natural gas. So some or the other businessmen gets the contract from the government for that particular exploration, where the businessman has to pay the royalty and also some share in that particular petroleum extraction. Now, for the month of June, Mr. Adani explored the petroleum reserves at this oil field. He got a portion of the petroleum silt, which is non-taxable under GST, worth rupees 3 lakhs, as a part of compensation. This petroleum silt is part of cost petroleum as per the contract entered into the government. Examine the taxability of petroleum silt. So students, as I said, this is a very specific contract. There is a specific circular dealing with this. What it says, compensation is received by Adani, there is no doubt, in the form of petroleum silt, which as per the contract with the government of Gujarat is part of cost petroleum. Now, as per circular number 32 oblique 2018, the cost petroleum is not a consideration received by the oil exploration contractor for the services provided to the government under the PSC, that is profit sharing contract, and thus not taxable person. Why? The reason is that the contractors carry exploration and production of petroleum for themselves and not as a service to government. They had acquired the rights to explore, exploit, and sell the petroleum in lieu of royalty and sharing profit. Consequently, the cost petroleum received by Mr. Adani is not taxable. Why? See, it is like कि while you are doing your work, you, like for example, if I'm a simple building contractor When I have to construct a building, I'll be digging out that particular land. Now, when I'm digging out the land, whatever mud, whatever rocks I will get, I will sell it off in the market. Now, that does not becomes a supply by the landowner to me. It is part and parcel that when I will be doing my work, there will be some waste, there will be some uh, what you can say unnecessary thing coming out of it, which is my default, my own item. So you cannot say it is given to me as a consideration. So since it is my own item, it is part of this particular contract. Hence, it is given over here that it is not to be treated as a separate supply, and hence there will be no GST on it. Fine, students. See, so there are some very specific transactions. Now, this is important, students. So Angad Private Limited engage in the business of distribution of construction material. As an incentive, Angad pays an amount of 75,000 to its employee upon achieving a specified sales target. So what is this contract? So with my employees, I have a special contract whereby if my employees are achieving some target, I will give them some bonus or incentive. Now, the incentive is part of the salary and applicable TDS as per relevant income tax provisions has been done. So we all know, we have studied income tax, that whatever employer gives you any additional amount as incentive bonus, that is also treated as part of salary and TDS is done. Now, Angad is of the view that GST is not applicable on this incentive, whether the view taken by Angad is correct. Now, again, students, here this question is directly dealing with Schedule 3. In Schedule 3, the very first item which is treated as no supply is service by employee to employer. Now, if you remember, I had given you one simple one line answer that there will be no GST on salary and wages. Now, you have to just evaluate one small thing, that whether any additional amount given by the employer to the employee, like in this case incentive, can be treated as salary. If your answer is yes, it can be treated as salary, then there will be no GST. So as you can see, Angad's viewpoint is correct. Why? Because in terms of section 7.2 read with schedule 3, services by employee to employer in the course of the employment is not to be treated as supply. Further, the amount which is paid as incentive by Angad is not in the nature of gift. See, had it been gift, and since the amount was above 50,000, we could have taxed it. But what Angad has given is not gift. What I have given to my employee is a remuneration. I have not given it free of cost. So it is not covered in Schedule 1. In fact, in the given case, the incentive is part of salary and is directly linked to the sales target. So in other words, it is very much part of supply and it is part of the salary contract. Since it is part of salary contract and also to corroborate this, you have deducted the TDS under income tax law of salary. So because of this, the final concluding part is that it cannot be taxed under GST. Fine, students. Okay. Next, XYZ Consultancy, registered in Bangalore, supplies technical consultancy services to its clients. It has been providing technical services to BA Limited since past 2 years. Consideration is settled by BA assignment wise. So please understand the question. So I'm in the business of providing consultancy. I've provided consultancy to one of the clients and the amount is to be given to me consignment wise, that is for each work separately. BA Limited paid 37 lakhs to XYZ on 10 January for XYZ consultancy agreeing not to provide similar technical service to any other business entity in India or abroad for a period of next 8 years. XYZ is of the view that 37 lakhs is not chargeable to GST. Now, why this? So, what is the point? See, there are two types of contracts. One is contract to do something, second is contract not to do something. I'm sure in Contract Act you would have studied this. Now, whenever there is an express contract not to do something, the question is whether it is a supply. When there is a contract to do something, we have no questions, no doubt, because I'm doing something for you. So we very well understand that, okay, this is going to be a supply. But when we have contracted, agreed that, okay, you will not do something like here, what has been agreed, if you see, it has been agreed that XYZ will not be giving the same service to any other business entity for next 8 years. So this XYZ consultancy is not expressly doing something for you, but it has agreed to you that it will not do something. What it will not do? It will not provide the same technical services to any other business entity. Now, this is the crucial part, that when you agree not to do something, always there was a confusion that can it be called as a supply, because supply generally was understood to mean something where you are doing something. Now, for this, there are multiple past judgments, plus there is a recent circular. So, students, please understand one thing. Even the contract law considers the act of not doing something as also as doing something. I'm sure you understood what I mean to say. I'll repeat. When I agree not to do something, this is also treated as a specific act. So agreeing not to do is equivalent to doing something. It means it will constitute a supply. So when I agree to tolerate something, when I agree to abstain from something, all these terms, to tolerate, to abstain, are considered as a specific act and are considered as performance under the Contract Act. Using the same analogy, the GST law has made it very clear, and now it has been even clarified using a circular, that where there is an express contract whereby you have agreed not to do something, that will be treated as a supply. Supply with supply, supply of agreeing not to do something. And that will not be leviable to GST. Sorry, that will be treated as a supply and that will be leviable to GST. So, what is the answer? XYZ is providing the service of agreeing to the obligation to refrain from an act, which is again, as I said, treated as a specific performance by the contractor. And as I said, there is a specific circular number 178. Kindly note this, which also says that when you expressly agree not to do something, that will be regarded as a supply and GST will attract. Now, coming to another scenario. So, Moksha Bhumi Industry has its unit in the state of Maharashtra. It stores finished goods manufactured by it at a depot in Gujarat. The depot is owned by Punya Bhumi, who is a related person of Moksha Bhumi. Punya Bhumi has not charged any consideration from Moksha Bhumi for allowing it to use the depot for storage purpose. Now, what this transaction is dealing with? Again, it deals with Schedule 1, which is supply without a consideration. Now, what is the case, students? I am related with you. So we both are related entities. Now, when we are related entities, and if there is a supply of goods or a supply of service between related person, the law recognizes this as a supply even though it is without a consideration. So what is the relevant portion that you have to refer? 7(1)(c), which is supply without consideration, and obviously it has to be always read with Schedule 1. So wherever there is supply of goods service between related person without consideration in the course of business, it will qualify as a supply. Correct. Yes, Smriti. Yes, Swaminathan, you are also correct. Next, Rob Shareholding, an approved intermediary, has entered into an agreement wherein certain securities were to be lent to Dhan Bank under security lending scheme. Bandhan Bank shall pay specified lending fee against such lending of security. Explain the taxability. It is straightforward answer. What is the straightforward answer? So we had a security lending scheme in 1997, which facilitates lending and borrowing of securities. Now we know securities are neither covered in goods nor in service. Therefore, a transaction in security which involves sale of security is not a supply. Be clear. We discussed this. I had explained at the start. Selling shares is not taxable. However, this scheme does not treat lending of security as disposal of security. Therefore, it is not excluded from the definition of service. The lending fee charged from the borrower of security has the character of consideration and will be taxable. So again, there is a specific circular identifying this. So the basic point is that lending of security under this lending scheme is different from sale of security. Had it been sale of security, there would be no GST. But since lending of security is different from sale of security, and the lending is taxable. Sorry. Next, Krishnadev is a trader based out in India. Ramakrishna, who is brother of Krishnadev, is located in China and is also engaged in the business of trading of goods. Krishnadev places an order with Ramakrishna for procurement of certain goods from local markets in China. Before the shipment of goods from China to India, Krishnadev sold such goods to Cristiano, a trader who is in Brazil. The goods were subsequently shipped from China directly to Brazil. Now we have studied this in Schedule 3. This is an out and out transaction. So where I had purchased the goods from China, but without taking the delivery in India, I directly dispatched the goods to another country, which is Brazil in this example. Hence, there is no GST applicability because it is a specific transaction covered in Schedule 3. Correct? Correct, Smriti. Good. Next, Mohandas International entered into a transaction for import of goods from a vendor who is located in Italy. Due to financial issues, Mohandas International was not in a situation to clear the goods upon payment of import duty. So Mohandas International sold the goods to Radhakrishna Export House by endorsement of title while the goods were in high seas. So again, students, we know this. Any transaction while the goods are in high seas is also outside GST. See, these are very specific case studies dealing with one of the clauses, in some cases of Schedule 3, in some cases of Schedule 1. So I'm sure you are now able to connect to it. Also, I'm sure you are able to understand how to write answers to this. We have to first refer to the relevant portion. Yes, you are correct, Uma. So, correct, Swaminathan. So you have to first refer to the relevant portion, Section 7, Schedule 1, Schedule 3, and you have to, in brief, mention what that provision is. And then finally, applying that provision to your given case, you have to give your concluding answer. Fine. Let us take one more, then we'll go to the next chapter. So Mr. Happy, who's registered under GST, has a huge residential property located at a prime location in Mumbai. He has let out the first and the second floor to Mr. Peace for residential purposes. Mr. Peace, who is registered under GST, surrenders his tenancy rights to Mr. Serene for a tenancy premium of 10 lakhs on 1st June. Mr. Serene has also paid the applicable stamp duty registration charges on transfer of tenancy rights. Moreover, Mr. Serene has agreed to pay a monthly rent of 1 lakh to Mr. Happy. You are required to ascertain whether GST is payable on the tenancy premium paid by Serene to Mr. Peace and on the monthly rent paid by Mr. Serene to Mr. Happy. Now, what you have to understand, students, is there are two different transactions. One is that my first tenant, who is Mr. Peace, had transferred the tenancy rights Now, tenancy rights is the right whereby you have the right to be a tenant in a property. Now, you can even transfer this right to another person because of which another person can now be a tenant in that property. So Mr. Peace has transferred this tenancy rights to Mr. Siri. This is the first transaction. And the second transaction is that after this tenancy right transfer, now the new tenant is Mr. Siri, who will be now paying me monthly rentals. So you have to analyze the GST leviability of this. Now again, there is a specific circular which clarifies that activity of transfer of tenancy rights against a consideration is covered under supply and hence liable to GST. So it is a form of lease or renting of property and it is specifically declared to be a service in Schedule 2. Important. Although stamp duty registration charges have been levied on first transfer, it shall still be liable to GST merely because it is a transfer involving execution of documents which may require registration and payment of stamp duty. It will not make it a no supply. See, so what is clarified? Merely because you have paid stamp duty, that will not make your transaction a no supply transaction. It will still remain leviable to GST. So the transfer of tenancy rights cannot be treated as sale of land. This is the main crucial point because many times people argue that if you are paying something on which stamp duty is applicable, so it becomes the transaction of land. So here they have clarified this that this will not be regarded as transaction of land and hence it will be leviable to GST. Again, there is a circular which clarifies that renting of residential dwelling for use as a residence to an unregistered person is exempt. Actually, we are going to cover this in the exemption chapter, but just the point is covered here. So we discuss that. Grant of tenancy rights in a residential dwelling for use as residence against tenancy premium or periodic rent is also exempt. Consequently, the monthly rent which is being charged by Mr. Happy to See will be exempt. Yes, correct, Smriti. And students, I hope this is all clear to everyone. Good. So we go to the next chapter. Just a 2 minutes psychological break. under GST. Okay. Now see, what is this topic of charge? So basically, once there is a supply, we all know GST is applicable. But in order for GST to apply, you have to fit in the charging section. I'm sure you all would be knowing the charging section is section 9 for CGST and the SGST Act, and it is section 5 for the IGST Act. Now let us try to understand the provisions relating to the charging section. If you recall, students, section 9, which deals with the charge of GST, and section 5 have 5 parts or 5 subsections. Firstly, I'll go to subsection 2. Subsection 2 says wherever there is supply of 5 petroleum products, those 5 petroleum products are outside GST for the time being. So there are 5 petroleum products which are kept outside GST for the time being. They would be included in GST at a later date to be notified by the council. These are those 5 supplies. So the crude oil, high-speed diesel, or in simple words, diesel, motor spirit, that is petrol, natural gas, and the aviation turbine fuel, which is the fuel required for planes. Now, besides these 5 items, remaining items are under GST, however, with one more important exception, that is alcoholic liquor for human consumption. This alcoholic liquor for human consumption is outside GST permanently. So this cannot be brought into the GST even by the council because this is outside GST as per the constitution. So if you see the definition of GST in the constitution, which has been included at the time of introduction of the GST law, it itself says it is a tax on supply except alcoholic liquor for human consumption. Further, over a period of time, one more point is added in the exclusion. So section 9, section 5 has excluded along with alcoholic liquor one more item you can say, which is the raw material for alcoholic liquor, which is the undenatured extra neutral alcohol or rectified spirit, which is to be used in manufacture of alcohol. So this has been kept outside GST again. So these two things are to be kept outside GST, and you can say they are outside GST permanently. Now, other than these and other than the 5 petroleum products, remaining items will be under GST. If you make intrastate supply, it will be covered under CGST, SGST. If you make interstate supply, it will be covered under IGST. Now, subsection 1 says tax has to be collected and paid by the taxable person who will be the supplier. What value? That section 15 of CGST will decide. What rate? That the government will notify. So you have a separate rate notification, one for goods, one for service. And there is a maximum limit cap, which is 20% CGST, 20% SGST, or 40% IGST. Now, besides this, you have subsection 3 and subsection 4. Both deals with those scenarios which are under reverse charge. Now, students, again, you would be knowing that there are some notified supplies where the tax has to be paid not by the supplier but by the recipient of those services. One is under 9 bracket 3, 5 bracket 3. Other is under 9 bracket 4, 5 bracket 4. So what is covered in 9 bracket 4 or 5 bracket 4? Only those notified supplies where the supplier is unregistered and the recipient is registered. So important for 9.4 is supplier should be unregistered and recipient should be registered. But in 9.3, there is no such restriction. So in 9.3, only the supply which is notified in the notification will be covered under reverse charge. And there is no strict condition that supplier should be unregistered or recipient should be registered. This is not there in 9.3. Then you have 9.5 and 5.5, where the tax on again some notified supplies, and here it is only of services, will have to be paid by the online portal through which those services are supplied, which is called as the e-commerce operator. So e-commerce operator is the online portal. When some specific services are supplied through these e-commerce portal, the tax on those supplies will be paid neither by supplier nor by recipient, but by a third person, that is the online app through which it is supplied. Now, what are the specific scenarios covered under reverse charge under 9.3 and 5.3? So first is the GTA service. Now within GTA, you have to remember students that now the position is that the GTA is firstly given an option. If the GTA wants, it can be covered under forward charge. Every GTA has this option, but this option has to be exercised at the start of the year. Whatever option the GTA opts at the start of the year, that has to be followed compulsorily throughout the year. So if at the start of the year GTA decides that it wants to be in forward charge, it will be under forward charge throughout the year, or else it will be under RC. Now, this RCM will apply only if the GTA is providing service to one of these recipients who are registered entities. But registered where? Registered under respective acts like Factories Act, Societies Act, Cooperative Societies Act, or it is a company or a body corporate partnership, casual taxable person, or the person who is registered under the GST law. Now, here there are some exceptions. These people, even if registered, will not be liable for reverse charge. Who are they? Departments or establishments of the government, local authority, government agencies who have taken registration, but the purpose of registration is so that they can deduct TDS. So where government bodies, government entities have registered under GST, but not because they are making a supply, because they are liable to deduct TDS on some supplies, those will not be liable for RCM of GTA. Other than that, all other registered recipients will be liable if the GTA has opted for the RCM option. Then legal services and arbitral tribunal services. Here it will be under RCM only if the recipient is a business entity whose turnover in the last financial year is above the limit of registration. Next, in case of sponsorship service, where the provider is not a body corporate, but the recipient is a body corporate or a partnership firm. Then, where services are provided by government to a business entity, this will also be covered under RCM. Now here, important is some services are excluded. First is renting of immobile property. Why it is excluded? Because it is covered separately in the next entry. And these services are excluded because they are always under forward charge. So other than these services, remaining services provided by government to business will be under RCM. Next, where the government is providing renting service, this will also be under RCM, but only if the recipient is a registered person. Now, this is important where you and me are giving our residential property for residence purposes. It is exempt. However, if this is given to a registered person, the same residential property, even if given for residence, will be taxable, but it will be taxable under RCM. Then, if the property is not residential property, then RCM will apply if the supplier is unregistered and the recipient is a person registered except composition dealer. So composition dealer, even though registered, is excluded from this RCM. Next, supply of TDR, FSI, supply of long-term lease in land. For both these services, supplier can be any person, but the recipient should be promoter. Promoter is the developer of a real estate project. Then, where a director is giving service to its company, insurance agent is giving service to the insurance company, recovery agents are giving to banks, all these are under RCM. Then comes the services of some professionals like music composers, photographers, artists, when they are providing their services to a music company or to a producer of a movie or a web series, that is under RCM. Now again, like GTA, this service provides the option to the author to pay under forward charge. So where the author has written some book which will be published by the publishing company, this service can be under forward charge if the author so opts. If not, it will be under RCM. Then services by members of overseeing committee given to RBI is under RCM. Services given by DSA to banks is under RCM. Services by business facilitator to banks for setting up rural branches is under RCM. Service by an agent of the business correspondent to the business correspondent is under RCM. Next, very important service is security. Now, where security service is given by a person who is not a body corporate to a registered person, such security services will be under RCM. But again, exception is where the registered person is again a government body who has taken registration only for the purpose of deducting TDS, or where the registered person is a composition dealer. In these cases, it will not be covered under RCM. Other than that, in all other cases, where the supplier is not a body corporate and the recipient is a registered person, security services will go under RCM. Then comes renting of motor vehicle service. Now, where again the supplier is a non-body corporate and the recipient is a body corporate, it will be under RCM. But again, over here, the supplier has an option of charging under forward charge. So if the supplier is charging under forward charge, it will not be under RCM. Otherwise, it will be under RCM. So students, these are the major services under RCM in case of CGST Act. In case of IGST Act, you have the same service, plus you have one additional service, which is import of service. So what it says, any service where the person, supplier is outside India and the recipient is inside India. So import of service is what is covered under RCM. Then we have a specific levy called as the composition levy. We all know. Now in composition, where the supplier's turnover in the previous year does not exceed a specified limit, then composition scheme is applicable. We all know there are two composition scheme. First one, which was introduced, is covering manufacturers, traders, and only one service, which is restaurant service. The turnover limit for this composition is 1.5 CR. The second composition, which was introduced later on, which is also called as the service composition, is applicable to all other services except restaurant, and it is also applicable to those people who are engaged in goods plus service both. Over there, the turnover limit for applicability is up to 50 lakhs in the last financial year. Now, besides this, what are the important points? In case of composition levy, you have a lower rate of tax. Now, what is this lower rate of tax? First, in case of manufacturer of goods, it is 1% on total turnover. Trader of goods, 1% only on taxable turnover. Restaurant, 5%. And in the service composition scheme, 6%. Procedures are simplified, calculation is simple, and you have only one simple annual return. So these are the two composition schemes. Now, what is the procedure? In case of new registration, you have the option given in the registration form to tick whether you want composition or not. However, if you are already registered and if you are complying with the composition requirement, then before the start of a financial year, you can make an intimation on the portal in the prescribed form and you can switch to the composition scheme. So this is the composition limit turnover in case of regular composition, and in case of service composition, this is the limit. Now, what are the restrictions and conditions? A person who is a casual taxable person or a non-resident taxable person is not allowed. Similarly, where you are under composition scheme, you have to still pay tax under RCM. Second, you should not be manufacturer of some notified goods, otherwise you'll be out of composition scheme. Another point, condition is you have to mention on your bill of supply. First, if there is no invoice, there is bill of supply. You have to mention composition taxable person not eligible to collect tax on supplies. And next, you have to mention this as a nameplate in your business premise at prominent places that you are a composition taxable person. Now, these are those notified goods. If you are engaged in the manufacture of these, you are out of composition scheme. Important is supplier or a trader of these goods has no problem, but a manufacturer of these goods is outside GST composition scheme. These are the rates. Important point to be noted is for traders that 1% rate is only on taxable supplies. In all other cases, the rate is on total turnover, which means it will be on taxable plus exempt. Keep this in mind. Only for traders, there is a concession that the rate will be applicable only on taxable turnover or taxable supplies. Yes, correct, Smriti. Now, who are not eligible? First, suppliers engage in making those supplies which are non-taxable. So if you are engaged in the supply of alcoholic liquor or petroleum products, you are outside the composition scheme. Next, important, you cannot make interstate supply. Very important. Interstate supplies are not allowed to be made by a composition dealer. The moment you do that, you are outside the composition scheme. Next, very important. Person supplying any service through electronic commerce operator is not allowed. So importantly, supply of goods through electronic commerce operator within the state is allowed, but supply of service through electronic commerce operator is not allowed. Next, manufacturer of ice cream, pan masala, as we have seen, the notified goods. If you are manufacturer of any of these, you are outside the composition scheme. CTP, NRTP are outside, and supplier of services as may be provided. Now, importantly, when you are in the first composition scheme, it covers majorly manufacturer of goods, trader of goods, and only one service. Now, there was a problem. Many times these businesses have some nominal services like rent. They have given some part of the shop on rent. Now, the question was whether they will be outside the composition scheme. So, for them, there was a relaxation given in the composition scheme, the first composition scheme, which is not for services, that they can provide services up to a maximum of 10% of the turnover in the preceding financial year or rupees 5 lakhs, whichever is higher. So this concession was given that where you are a manufacturer or a trader or a restaurant, you can provide other services like renting any of these small services, but not exceeding 10% of your last year's turnover or in amount not exceeding rupees 5 lakhs. Yes. And then these are some other pointers in the composition scheme. Fine, students. So now let me take you to some of the important questions here. So Panini Private Limited, Jaipur organizes a sports event. Is a sponsor to a sports event which is organized by Pink City Club, which is a non-body corporate in Jaipur. Now, Panini Private Limited is a corporate and the organizer is a non-corporate. It has paid an amount of 5 lakhs for such sponsorship of the sports event. Consequently, the said event was named after the brand name of Panini Private Limited. So that is how sponsorship happens. Now examine who is the person liable to pay GST. So students, here will have to check whether the condition of RCM are satisfied. Yes, Smriti correctly pointed out. So since the supplier of service is not a body corporate and the recipient is a body corporate, so now remember this notification number. This is the RCM notification for service. Now in the present case, Pink City Club, who is a supplier, is not a body corporate and the recipient is a body corporate. So in this particular case, the tax has to be paid on the body corporate, that is RCM will apply. Correct? So, hmm. Next, second, Arpan Singhania is Executive Director in Narayan Limited. The company paid him sitting fees amounting to 25,000 for Jan. Further, salary was paid to Arpan amounting to 1.5 lakh for the month of Jan, on which TDS was deducted as per applicable provisions of income tax. Now, Tapasya and associate in which Arpan is a partner supplied certain professional services to Narayan Limited. Discuss the person liable to pay GST in each of the supplies involved. Now, see, there are two supplies. One, where Arpan is giving supplies of director service for which sitting fees is paid to him by his own company. And second, there is another consulting firm in which Arpan is one of the partners. The second service is given by this consulting firm to the company. Now we have to discuss the applicability of GST. Firstly, is GST applicable on both? Answer is yes. Now comes the main question, who is the person liable to pay GST? Now see students, in case of director, there is an important point. There is also circular for this, where the director is getting payment in the capacity as an employee. I'm sure you all know that in income tax law, there is section 192 for TDS on salary, and there is 194H on TDS for director fees. Now, when a director is a full-time director and is receiving the money in the capacity as an employee of the company, it is not covered under GST because of Schedule 3 exclusion. But where the director is receiving a sitting fees, that is, which is not covered in section 192 TDS because it is not salary, it is covered in 194H TDS. In such cases, students, it is leviable to GST. So in this particular case, what the director is receiving first is 25,000 as sitting fees, which is leviable to GST. Second, it is also receiving 1.5 lakhs as salary, on which salary TDS has been deducted. This is outside GST because of Schedule 3. Now, as far as this 25,000 is concerned, which is leviable to GST because it is not salary, who is liable to pay GST? So as per the RCM notification, it is the director. Now coming to another part, that the director is also a partner in another firm, which firm is providing technical consultancy. Now, what is the tax implication of this? The tax implication of this is, since this is professional service, GST is applicable, no doubt. Second, who is the person liable to pay GST? Here, this is under forward charge only. Why? Because even though the director is partner in this firm, the firm is providing a service which is not the director service. It is a different service, and hence the director RCM provision will not apply. Umang has written something. Yes, you are correct, Umang. Perfect. Yes, Smriti, correct. You are also right. So both of you are correct. So this is what I just explained. So sitting fees paid to the director. So as per RCM notification, this will be covered under RCM, and hence the company is required to pay GST. Salary paid to director. So as I said, there is a circular which is number 140/2020, where the director remuneration is leviable to TDS under 192 of Income Tax Act. It is a salary and hence outside GST. And last, the service which is provided by this Tapasya and Associate, it is a different nature of service. It is not director service, and hence the supplier, that is the Tapasya Associates, will be required to pay GST under forward charge. Next, Mr. Rajveer, a registered person as Delhi, is in the business of selling goods relating to interior decoration under the firm name Rajveer and Sons. He has opted for a competition scheme for the financial year 23-24. His turnover for current financial year is 80 lakhs and is expected to achieve 130 lakhs in the financial year 24-25. Now, discuss whether Mr. Rajveer can still enjoy the benefit of composition in the financial year 24-25. See, we have to first for this check what is the nature of business. Is it supply of goods or supply of service? What is given? It is in the business of selling goods relating to interior decoration. So it is in the business of supply of goods. Now, when it is supply of goods, what is the turnover limit for the purpose of composition? Is it 1.5 lakhs or is it 50 lakhs? Sorry, 1.5 crore or 50 lakhs? Okay, Umang has given me one answer. Okay, Swaminathan has given me another answer. His students. Very good. All of you are correct. Smriti, Swaminathan, Umang. So since the business of Rajveer and Sons is of supply of goods, the turnover limit applicable is 1.5 lakhs. Since the turnover of previous year is below that limit and he had already opted for competition scheme in the current year, he is eligible. Present turnover is 80 lakhs and he is expected to achieve 130 lakhs in the entire financial year. So total is 130. So still he continues to be eligible for composition scheme in 24-25. Now, second part of this question says his son wants to start business of providing the interior decoration, which is a service. In this particular case, what it says, after completing post-graduation in interior decoration under the same firm name, that is Rajveer and Sons, with effect from 1st April of financial year 24-25 and wants to enjoy the benefit of competition under the GST. Now here, this will be a problem because once you start providing a service in that particular firm, the limit for composition will shift to 50 lakhs. Now, in that particular case, you will not be eligible for composition once your turnover crosses 50 lakhs. Correct? Yes, very correct. You all are given correct answers. So next question, students. Varun and Arun started a partnership firm of architects in Bhopal on 1st April of the current financial year. The firm provides architectural services in Madhya Pradesh only. It provides. So it provides the following details of turnover for the current financial year. So April to June it is 20, July to September it is 30, and thereafter it is 20. The firm has obtained registration under 22 with effect from 1st July. That is the date when it crosses the 20 lakh limit. And opts to pay tax under composition. Determine the tax liability of a for the quarter April to June. Now in April to June, your turnover was below the registration limit. You are not registered, so no GST. Thereafter, from 1st July, you are registered. And by the end of September, you reach 50 lakhs. So on this 30 lakhs, you are leviable to GST. But since you are registered under the composition scheme, the rate will be 3%, 3%, that is 6% on this 30 lakhs. Thereafter, you will switch to regular scheme because your turnover here, combined turnover is now 50 lakhs. So from October onwards, for this 20 lakhs, you'll be paying GST at the rate of 9%, 9%, that is 18%. Swaminathan, but here he is already in service, na? So his entire business is service, na? You're talking about which is this point you have mentioned is for the previous question? Okay, understood. Yes, you are right, Swaminathan. Correct. Perfect. Now we have to examine whether the suppliers are eligible for competition levy under Section 10 in following independent cases in the beginning of financial year 24-25. First, technology enterprises listed in Jalandhar is engaged in manufacturing and supplying computer system. Its aggregate turnover in the last financial year is 125 lakhs. technology enterprise supplies the computer system manufactured by it within the state of Punjab only. With a view to expand its business operation, it is also start providing the repairing service of computer system in Punjab. Now, see, if I keep the service portion aside, you are eligible because you are only in supply of goods within the same state. So you are eligible for a compensation scheme and your turnover is also below 1.5 CR. Now, if you want to include the repairing service, what Swaminathan was mentioning for the previous question, that you can include service, no problem. But if the service portion is not exceeding 10% of your turnover or 5 lakhs, whichever is higher. So in this case, 10% of turnover is 12.5 lakhs. So it is higher than 5 lakhs. So if your service component is up to 12.5 lakhs, you can still continue under the composition scheme because still the goods composition scheme and the limit of 1.5 crore will apply. But the moment your service component exceeds the 10% of the previous year's turnover, you will not be eligible for the goods composition scheme. And in that case, you will be covered in the service composition scheme. But since now your turnover of last year is above 50 lakhs, you will not be eligible for the service composition scheme and you will be required to pay tax under the normal scheme. The answer for part A is that until they start the repairing service, they are eligible for composition scheme. When they start repairing service, until the turnover of repairing service reaches 12.5 lakhs, still they are eligible for composition scheme because up to 10% of last year's turnover, you can provide service even in the goods composition scheme. But the moment the turnover of their repairing service exceeds 12.5 lakhs, they will be out of composition because point number one, they will be out of the goods composition scheme because the turnover of service exceeds 10%. Second, they are eligible for service composition scheme, but that they cannot avail because their last year's turnover is above 50 lakhs, which is keeping them outside the service composition scheme as well. And hence, finally, they will be under the normal scheme. Yes, correct. Swaminathan and Smriti, you both are correct. So this is how students, you'll have to write the answer. Next, Mr. Siddharth and Sons, registered in Delhi, owns a restaurant, Tasty Food, with a turnover of 112 lakhs in the financial year. In view of the growing customer, it also starts intrastate trading of juices. So, what will happen, students? Swaminathan, why not allowed? So, intrastate, no, not interstate. Swaminathan, intra means same state, no? So, what is the challenge? Yes, Smriti, correct. Swaminathan, what is the challenge you are foreseeing in this? Swaminathan. Okay, perfect. So, even if you start trading of juices, still you are eligible for composition scheme 1 because it is within the state and the turnover limit for eligibility is 1.5 crores in the last financial year. Because for restaurant and for trading both, the turnover limit remains 1.5 crores, which you are satisfying. So even if you start trading of juices within the state, you will continue to be eligible for the composition scheme. Great. Next. Sitaram Associates, who is registered in Sikkim, is engaged in running a restaurant chain, West Kitchen, in the state. It has a turnover of 73 lakhs in the last financial year. In the current financial year, it decides to shut down the food chain owing to huge losses being incurred in the said business. Instead, it will start providing intrastate architect services from financial year 24-25. Now, what will happen, students? Whether composition scheme will be available in 24-25. Yes. So Smriti has said that since it is the state of Sikkim, the limit applicable is 75 lakhs. Okay. So my question is, will it be eligible for composition scheme in the next year? Swaminathan says no. Umang says it can continue. Acha, Umang says it can continue until its turnover reaches 50 lakhs. What will be the answer? Swaminathan says no. Smriti and Umang, I believe both are saying yes. Okay, Smriti is also saying no. So the answer is not eligible. Umang, see, in the current year, you have changed the nature of your business from one category to another. Earlier, your turnover was 75 lakhs because you are in the state of Sikkim. So instead of 1.5 crore, the limit for composition was 75 lakhs, as pointed out by Smriti. Now you are eligible for the composition scheme because you are in the first category of restaurant service. Now in this current year, when in the same registration, you want to start another line of business, which is also changing your category of composition from the first to the second. Second is where you are now becoming supplier of service other than restaurant. In that particular case, Umang, you will not be eligible because now for you, the eligibility for composition scheme in this current financial year will be tested, keeping 50 lakhs as the limit. Now, since your previous year's turnover had exceeded 50 lakhs in the current year, for this new business, which is of providing architect services, you will not be eligible. Fine, beta? So your last year's turnover has exceeded the limit of 50 lakhs. So, Umang, you will not be eligible for composition in this year. Great. Next, Deepti Services registered in Uttarakhand is exclusively providing intrastate hairstyling service. It has a turnover of 34 lakhs in the financial year 23-24. Now, if your turnover in the last financial year is 34 lakhs, will you be eligible for composition in the current year? Yes, because the limit is 50 lakhs and you are well within the limit. Will your answer be different if Deepti Services also start intrastate supply of beauty products along with providing hairstyling service? Now see, even if you start beauty products, which is supply of goods, the question is which limit will be checked? That is the higher limit which is applicable for goods or the lower limit which is applicable for service. Answer is the lower limit applicable for service, and that will be checked to determine are you eligible for composition scheme. So in this particular case, since your last year's turnover is 34 lakhs, in the current year, that is 24-25, even though you start another business, which is of supply of goods, still the limit applicable is 50 lakhs. Why? Because you're already in the business of providing services other than restaurant, for which the limit eligibility is 50 lakhs. So that eligibility will continue. And since your last year's turnover is not exceeding 50 lakhs, you will be eligible. See, let us understand one thing. Now, I think this particular point of Omama is on the basis of previous question. See, in the previous question, originally you were in a higher category of composition limit. But if you switch to the second category of composition limit, for the previous year also, so you have to satisfy the lower limit of 50 lakhs. And hence, you are not eligible in the current year, Omama Akhtar, for the composition scheme. This is, I'm sure we are talking about the previous question. In the current question, you are eligible because your turnover limit remains 50 lakhs for the previous year. So, Mama, in the next year, again, you will check 50 lakhs of the previous year. If the previous year turnover has not exceeded 50 lakhs, so in the next year, you will become eligible. Yes, correct. Fine. Great. Next. B&D Company, a partnership firm in Nagpur, is a wholesaler of taxable product P and product Q, which is exempt. The firm supplies these products in the eastern parts of Maharashtra. All procurements of the firm are from suppliers registered under regular scheme. The firm pays tax under composition scheme. B&D Company has furnished following details with respect to its turnover, which is exclusive of tax. Turnover of the quarter ended 30th June and turnover of quarter ended 30th September. So this is 60, this is 17, 65, this is 50, and this is 17. Now, what is important to be noted, students, is you are a trader. Since you are a trader, I have already emphasized one point. You have to pay tax only on the taxable supplies, not on the exempt supplies. So you have to pay tax only on 60 lakhs in the first quarter. Now, when you go to the second quarter, keep testing, are you still under the exemption? Exemption means, sorry, composition. So you remain under composition until and unless you are within the 1.5 crore bracket. So even in the second quarter, your total turnover is within 1.5 crore. So you are still eligible for composition scheme. So you have to pay tax in the first quarter on 60 lakhs at the rate of 1%. In the second quarter on 50 lakhs at the rate of 1%. Now, what happens in the third quarter? Now here, just keep a note of the total. What is the total by the end of the second quarter? So it is 1 crore 44 lakh 65,000, correct? So 144.65 is your total turnover by the end of the second quarter. Now for reaching 1.5 crore, the amount left is 5 lakhs 35,000, correct? Now you have to keep a track as to where your 5 lakhs 35,000 is crossed. So here it is 2 lakhs 3,000, no problem. You will pay tax only on P at the rate of 1%. Here it is 138, so adding both also do not cross 535. So again, you will pay tax only on P 1%. Here again, it is below 535, so you'll pay only tax on P at the rate of 1%. Now here you have to be slightly cautious. Use your calculator to find out, have you crossed 535 here? So what is the total? 341, 447. Okay. 448. Now when you add 92 in 448, how much it will become? 450 and 530. Okay, so still up to 3rd October, you are in composition scheme, you have to pay tax only on 58,750. Now the moment you make this 1 lakh, you are outside the composition scheme, correct? Yes, Umang. So where you crossed, so we have up to 535. So here we cross 535, or is it 530 exact? If I'm not wrong, this year you are 530. You cross here on 5th October, correct? You cross on 5th October, students. 535. Am I correct? So from 5th October onwards, you are in the regular scheme. Umang is saying on 3rd October, we have reached 540. How come? So it is 341, 447, 448, 450. Yes, 540. Okay, correct. You're right. On 3rd October itself, students, we have crossed 535. So in this case, on this 58,750, I have to pay full GST because here itself I have crossed the limit of composition turnover of 1.5 CR. So from 3rd October itself, I'll have to pay tax. I'll have to pay tax on this entire 5,750. I cannot split it because it is a single bill. So on that, I will pay entire tax rate what is applicable. So in short, from 3rd October, I'm outside composition. So exempt will remain exempt, but on this portion, 58,750, then 1 lakh, then 94,000, on all these, I'll have to pay tax at the rate of normal rate, not the composition rate. Fine, students. I hope this is clear and understood by all how to check the composition limit. Fine. Is this clear to all? Chalo. So students will take 10 minutes break here. And after that, we'll go to the next chapter after the break. Thank you very much. 10 minutes break, students. which is place of supply. Now see, there are multiple entries in place of supply, as we all know, which is specific to goods and services both. So let me try to revise some of these entries. Okay. Smriti, let us first complete this, if it is okay, so that at least I'll be covering all the topics assigned. And then if time permits, I'll take your queries of previous chapter. Fine. It should not happen that we do not cover all the topics assigned. Okay. So coming back, now students, in place of supply, let us understand some important aspects. So what exactly is this place of supply? So please understand that we all have been saying and studying that GST is a destination based tax. But in the entire GST Act, entire act, which includes the law, the notifications, circulars, sections, rules, nowhere the concept or the word destination based tax is used. Now, the law does not use this term, but we commonly say that it is destination. So there is a conflict. At least it appears on the face of it that there is a conflict, correct? However, that is not the case. Why? I'll tell you. The reason is because for general understanding, we are using the term as destination. But in the legal language, the term which is used to represent destination is this, that is place of supply. So just remember this, that if anybody tells you from where you are deriving this concept that GST is a destination based tax, the answer is from this concept of place of supply. Keep this in mind, students. Fine. Now, so GST is a destination based tax, and how we achieve this through this concept of place of supply. Now, what will be place of supply has to be determined only by the parliament, that is the center. This is written in the constitution. Now, since this has to be determined only by the parliament, that is why the place of supply provisions are not in the CGST and the SGST Act. They are only in the IGST Act, because I'm sure you all know whatever goes in C also has paralleliness. It means both center and state together decide on this. But whatever comes in IGST, it is decided only by the center, and Constitution has made it very clear that place of supply will be determined only by the parliament, that is by the center, and hence place of supply concept, the entire provision is only in the IGST Act. Now, for the purpose of determining place of supply, the transactions are divided into four categories: transaction of goods, transaction of service, within goods, domestic supplies and international supplies, and within service, domestic and international. Now, within goods, the classification of domestic and international is simple. International means whatever is import and export, and domestic means whatever is other than import export. So you have section 10 determining place of supply of goods other than import export, that is for domestic transaction, and you have section 11 of IGST determining place of supply of goods for international, that is for import and export. Now, within place of supply of goods other than for import and export, that is for domestic, what are the provisions? The provisions are: first, whether the supply is involving movement or not. If it is involving movement, you have to see the first two cases. If it is not involving movement, you have to see the other two cases. Now, what are these four cases? Let us understand. So first, where the supply involves movement of goods and there are only two parties, supplier and the buyer. Then the place of supply is the place where the movement terminates for delivery. In simple words, students, it is the address of the recipient on my invoice. That is what is the place of supply. Second, where there is a movement and there are three parties: supplier, buyer, and third is the place of delivery. So when this situation comes, we call it as bill to ship to transaction. So this situation will come wherever the buyer has placed order on the supplier but has asked to dispatch or deliver the goods at some third person's place. In such a case, physically the goods are going to a third person. So let us say the supplier is in Maharashtra, the buyer is also in Maharashtra. Let us say I'm in Mumbai, you are in Pune, but you want the delivery to be done in Hyderabad. Now, in this particular case, how to determine the place of supply? Physically, the goods are going to Hyderabad. But this second point, section 10 says the place of supply will be the place of the buyer. Don't be misled by this word third person. Here, third person, they mean the buyer. So it will be place of supply as Pune in my example and not Hyderabad, even though the goods are physically going to Hyderabad. Please make a note of this. This is very, very important point. So it is the place of the buyer. That is you, which is Pune in my example, and not the place where you have asked me to give the delivery. When there is no movement involved, then the place of supply is the location of the goods where they are at the time I have given you the delivery. So it is place where the goods are located. Now this is important because this is an amendment where supply is made to unregistered person and the address of such person is recorded on the invoice. Then you have to see nothing. The place of supply is the address mentioned on the invoice. Here, they have also clarified that you may not mention the entire address, even if you mention the name of the state. That is sufficient to be treated as the address. The place of supply will be the state. Yes, Smriti, you are correct. It is section 10, subsection 1, clause CA. Next, where supply is made to unregistered person and the address of such person is not recorded on the invoice. So where you go to a shop, the person simply gives you a cash invoice or invoice where only your name is written, no place is written, then the place of supply is the shop's address, that is the location of the supplier. Where the goods are supplied with the condition that they have to be assembled or installed at a particular place, the place of supply is the place where the goods will be assembled or installed. So place of installation becomes the place of supply. Next, where the goods are supplied while you are in journey. So when you are in journey on a ship, on a plane, on a train, and you buy some goods, the place of supply is not the location of the train while you are buying the goods, because that is very difficult to identify. Similarly, when you are in plane, it will be very difficult to identify exactly at what moment you have purchased the goods and where the plane is at that moment. So the law has not kept that as the place of supply. It has kept the place of supply as the place where the goods were onboarded the conveyance. So these goods would have been loaded on that vehicle, vessel, aircraft. So in whichever state the goods were taken on board, that is, they were loaded on the plane, on the ship, on the train, that place becomes the place of supply. And then you have the residuary rule, which says that where the place of supply cannot be determined in any of the above manner, then the government will prescribe a specified manner for determining the place of supply. Then comes the international transaction, that is transaction of import export. Here the law is simple and clear. The place of supply in case of import is the location of the importer, not the place where the goods have landed on import. So let us say you are a buyer from Madhya Pradesh, Bhopal. You have ordered some goods to come from UK. They are landing at the Bombay port. So the port of landing, port of import is Bombay. But in shipping bill, your address of Bhopal, Madhya Pradesh is mentioned. So the place of supply is Bhopal, Madhya Pradesh, and not the port of landing, that is Mumbai in my example. In case of export, the place of supply will be the outside address, whichever place you are exporting the goods. Then we come to place of supply for services. Now here again you have two parts, domestic and international. But how domestic and international is determined? Here they are not saying import export of service. Be clear. So for goods, the category was whether it is import export, then section 11, if not, then section 10, which I am calling as domestic. For services, they have not said import export of service and others. For service, what they are saying is what is domestic transaction of service where the location of supplier and location of recipient both are India. We call it as domestic transaction of service. Section 12 applies. Where the location of supplier, location of recipient, any one of the location is outside India, we call it as international transaction. Section 13 applies. Now, when you come to section 12, section 12 has provided some specific rules, and if you are not fitting in the specific rule, you'll go to the general rule. What are the specific rules? First, in case of immovable property related services like accommodation, construction, etc., or where it is accommodation in a boat or a vessel, like you go on a cruise, the place of supply is the location at which the immovable property or the boat is located. If the immovable property is located outside India, the place of supply will be the location of recipient. If the immovable property or boat is located in more than one state, now this will happen in case of a cruise. So you are going on a cruise from Bombay to Goa, Bombay to Visakhapatnam. In such case, the cruise is located in different states. Then the place of supply will be each of the states in proportion of the value provided in each state. So they will apportion the entire cruise value between different states to determine the place of supply. In case of restaurant catering and personal grooming or fitness or beauty treatment, the place of supply is where these services are actually performed. For training, the place of supply depends upon whether the recipient is registered or unregistered. If the recipient is unregistered, the place of supply is place where the services are performed. If the recipient is registered, the place of supply is the address of the registered recipient. Just a minute, students. There is a power failure at my end. 1 second. Yes. So, in case of training and performance appraisal, if your buyer is a registered person, then the buyer's admission to an event or amusement park. So, you are going for SL World or Magica or any such places, then the place of supply is the place where that event is actually held or the park is situated. Organization of the event, again, it depends upon whether it is B2B or B2C. If the recipient is registered, the place of supply is the location of the recipient. If not, it is the place where the event is held. If the event is held outside India, then the same like immovable property case, the place of recipient will be the place of supply and not the place outside India. If event is held in more than one state, then again, each state, the value will be apportioned. How? We are going to see that below. Now, transportation of goods. If the recipient is registered, recipient's place. If the recipient is unregistered, then the place from where the transportation starts. See, I'm trying to give you simplified words. You may note down these words because sometimes the language of the law is difficult or it gives a different impression. So, for goods transport, if the recipient is unregistered, the answer is place of supply is the starting point of transportation, not the end point. Similarly, for passenger transport, if the recipient is registered, then the location of registered recipient. If not, then again the starting point of the journey, that is the place from where the person will embark on the plane, that is the starting point. Again, where any services are given while you are in journey, that is on board the conveyance, the place of supply here is the first scheduled point of departure. So it is the first point from where the plane will take off. That place is the place of supply. I hope everything is clear up to this point. In case of banking and financial services, if the recipient address is available on the records of the supplier, recipient's address. If not, then the supplier's address. Insurance service, same rule. Recipient registered, recipient's address. If recipient is unregistered still, if the address of the recipient is available on the records, again the recipient's address. Advertisement services given to government. It will be each of the states where the advertisement is broadcasted, displayed or run. If it is in multiple states, then you have to apportion the value. Telecom services, if it is a fixed line, which may be a telephone fixed line or an internet fixed line or the dish antenna put outside your house, the place where such equipments are installed. If it is a mobile service, then in case of mobile for postpaid, it is the address of the recipient. If not available, then location of supplier. In case of prepaid, if you are doing the recharge through some shop or distributors, then that shop is the place of supply. If not, then your address, that is the location of recipient, is the place of supply. Now, where services are ranging over multiple states, like first, in case of lodging accommodation service, where the cruise is moving from one state to another. Now, we studied above, you have to apportion the value. So whatever is the total charges of the cruise, you have to apportion between the different states from which the cruise is passing. The question is, how to find out the ratio? The answer is number of nights stayed in each of the property. So if your cruise is traveling from Bombay to Goa, how many nights the ship was in the sea which is connected to Maharashtra and how much nights it is in the sea which is connected to Goa, that will be the ratio. Then all other services provided in relation to the property, including organizing a marriage reception accommodation in a single property located in two or more states. Then if it is for a immovable property, the ratio to be taken is of area. Next, service by way of lodging, accommodation by a houseboat or a vessel, time spent by the boat or the vessel in each of the state to be determined on the basis of declaration made. Then, manner of determining proportionate value of service relating to organizing of events where event is organized in multiple states. Then, how to distribute. So over here, they have said the proportionate value of service to be computed by application of general accounting principles. So here they have not given any ratio. They have left it to be determined on the basis of general accounting principle. And then the next service, which is advertisement for government. Now, when you're doing advertisement for government, again, the place of supply is the state where that advertisement is displayed, broadcasted. But if let us say the advertisement is broadcasted across India, like for central government schemes, many times the advertisement is displayed across India. Then how to determine the ratio? So here they have given multiple possibilities. First, where advertisement is published in newspaper and publications, and it is going to, because it is a newspaper like Times of India, now Bharat Times, which is a newspaper going throughout India. Then how to determine the proportion? The proportion will be based on the number of editions which are published in each state. Now we all know that newspaper determines how much quantity it is going to publish for each state. So that newspaper's publication of each state will become the ratio. Next, where advertisements are done through printed material like pamphlets, leaflets, then how much is the number of pamphlets, leaflets, which is distributed in every state. That will be the ratio. Where advertisement is done in the form of hoardings, other than on trains, that is fixed hoardings on roads, then the amount is payable on the basis of number of hoardings in each state. Where the advertisement is done on train, now the train is moving from one state to another. In such case, how do you find out the ratio to determine the proportion to be divided in each state through which the train is passing? You have to take the ratio of the length of the railway track through which the train is passing and how much of the railway track is falling in each state. Next, you find many times advertisement printed at the backside of the electricity bill, gas bills, etc. Now again, these advertisements are spreading across India because that electricity bill is given in every part of India. Now in such cases, how will you determine? The ratio will be depending upon the number of consumers in each state. So when you are printing an advertisement behind the electricity bill, now the bill is given to consumers across India. You'll find out how many consumers are in each state. That will be the ratio. Advertisement which are put on railway tickets. Again, behind the railway tickets, you are putting some advertisement. Then it will be depending upon the ratio of number of railway stations in each state. So here the ratio will be of number of railway stations. Where advertisement is broadcasted on a radio station, then in such cases, the ratio will be by virtue of its name in part of each state. It means, so how many radio stations are there in each state? That will be the ratio. Now, interestingly, where it is done over television, in such cases, it will depend on the viewership of that channel in each state. And now how viewership has to be determined. So that will be determined on the basis of figures which are published by BARC. So you have to take the figures published by BARC. That figures will determine how much is the viewership of that particular channel in each state. That will become the ratio. Where advertisement are put in cinema halls, then it will be on the basis of the number of cinema halls or on the number of screens in the multiplex theater. That becomes the ratio. Advertisement is put on internet, then it is deemed that such service is provided across India. And in such cases, again, the ratio will be taken of the internet subscriber in each state. Student, this is how they will determine the ratio for each state. Again, if advertisement is done by sending SMS, now many times we have seen that during elections and other times you directly receive SMS. In such cases, it depends upon the number of telecom subscribers in each state. That will be the ratio in which you will distribute the total amount between various states. Next, manner of determining proportion value of service relating to installation of leased circuit. So let us say a leased circuit line is put passing from Haryana, from Delhi to Noida, that is UP. In such cases, what will be the ratio for dividing the charges between the three states? It will be the number of points which are falling in each state. So depending upon the number of points which are falling in each state, that will be taken as the ratio. Now, besides all the above specific rules, you have a general rule. General rule will be applied where your service is not falling in any of the above specific rules. I'll give you a practical example. Our chartered accountant services are not covered in any of the above specific rules, so we fall in the general rule. Now, for general rule, what is the method of determining place of supply? So if it is B2B, that is where my clients are registered, place of supply is the address of the registered client. But where my clients are unregistered because it is B2C, then you have to check whether the address of the client is available. If yes, again, the place of supply is the location of the recipient. If not, then it will be my address. So where I'm not having address of my client, I'm giving a consulting service and the client is unregistered. The place of supply is my own office. So it will be a C+S supply. That is, it will be an intrastate supply. Now, yes, if anybody has a question, we'll put it over here, students, relating to section 12, because there were multiple place of supply rules. If you have any questions, please ask me. Yes, students, anybody? Any queries or questions? No questions? Excellent. Now, we move on to the place of supply in case of services where either the location of supplier or the location of recipient, one of this is outside India. Let us call this as international service. Now, please remember, students, there is a difference between I calling this as international service and it being import of service or export of service. Why I'm saying this? Because where one of us are outside India, it is international service. Fine. But in order to make it import of service or export of service, there are number of conditions to be satisfied. Only when all the conditions are satisfied, then only that service will be import of service or export of service. So keep in mind, merely because one person is in India, one person is outside India, that will not make it import or export of service, but we call it as international service, though it may not become import and export because the definition of import export has some specific conditions to be satisfied. Umang is asking, sir, is there any penal provision for issuing invoice for uh, for incorrect place of supply? See, Umang, technically there will be no harsh provisions. Why? Because it may be a clerical mistake at your end. See, most important point in penal provisions is, do you have intent to evade tax? Answer is no. My only mistake is instead of correctly identifying the place of supply as Maharashtra, I've incorrectly identified it as Karnataka, but I've paid the whole tax. So in such cases, there will be no harsh penal consequences. Yes, but whenever this will be identified either by me or by the GST officer, we will have to rectify it. How it will be rectified? I will have to pay the correct tax by identifying the correct place of supply, and whatever wrong tax has been paid will be refunded back to me. Correct? Now coming to section 13, that is the place of supply where one of the location is outside India. Now in this case, again, we have one default rule, and for all remaining cases other than the default rule, we have the specific rule. Let us go to the specific rule first. Now, what is the specific case? The first specific case is service is supplied. Now, what is the service? It is the service where the service is performed on some goods and the goods have to be made available physically. So let us say you want to do some manufacturing process. You have to do some repair process on the goods. Now, where any such activity has to be done on the goods have to be present physically. So where any such service is performed, where the goods have to be made available physically, the place of supply is the place where these services are actually performed. Next, services in respect of goods, but where the goods are not made physically available, but they are at remote location and we are providing the service by means of electronic media. Example, so let us say you want to fix some problem in your television. You contact me over Zoom. I guide you over Zoom how to fix that problem and you fix it. That will also fall over here. So what is the place of supply where the goods are situated at the time of supply of service? So in both these points, one thing is common. The place of supply is place where the goods physically are. Now here, an exception has been carved out when above rule will not apply. The above provisions are not applicable in case the goods are temporarily imported into India for repairs, treatments, or any process. And again, after that process is complete, they will be sent back, that is re-exported. In such cases, they have said that this provision will not apply, the general rule will apply. And in that case, the place of supply will become the recipient's location and not the place where the goods physically are. So where the goods have to brought into India for some repairs or treatment, place of supply will not be the location of goods, that is India. It will be the recipient's location outside India. Now, we come to the second specific rule. Now, second specific rule is similar to the first specific rule. The only difference is here the services are such which requires a physical presence of that person because the services are to be performed on the person. So this includes services like beauty treatment, or treating that person. Now, in such cases where the physical presence of that person is required, the place of supply of such services, same like the above rule, it is the place where the services are performed. So if let us say for some beauty treatment, the person has come to India for some hair transplant therapy or for some makeup or some specific service, the place of supply is India. That is the place where these services are actually performed. Next, services provided in relation to immovable property. This is same like the previous section. It is the place where the immovable property is located. Next, admission to an event or organization of event. If you recall in the previous section 12, both these were separate. Admission to event had a different place of supply rule. Organization of event had a different place of supply rule. In case of international transaction, both are having the same rule, that is the place where the event is held. Now, if the above services are supplied at more than one location, in that particular case, what are these services? Goods or the person has to be present, involve property and event. So all the above services, if they are provided in different states, then again the same rule, you will have to apportion it. But before that, at more than one location, including a location which is India. So if let us say these above services are to be provided in multiple countries and one of the countries India, they say that we will tax it in India. That is a taxable place of supply is India. Where within India it is in more than one state, then it has to be again apportioned using some appropriate ratio. What is that appropriate ratio? That we will discuss at the end. Next, services by a banking company or a financial institution to its account holders. Here the place of supply is the location of supply. Similarly, for intermediary services, the place of supply is location of supplier. Here I would like to mention, students, the current Finance Act 2026 has removed this intermediary point from here. So it has been deleted. Because of this, now this intermediary point is not falling in this rule. It is gone to the default rule. Next, service consisting of hiring of means of transport. So wherever you are hiring a truck, you are hiring a bus, that service is also covered in this, where the place of supply is the supplier's location. Next, for passenger transport, the place of supply is the place from where the journey starts. Simple, same like our previous case. So for passenger transport, the place of supply will be the starting point of the flight. Again, where services are provided on board the flight, it will be again same rule, first schedule point of departure. So that is the starting point from where the flight started. Online information database or access retrieval services, we call it as OIDER. It is the location of the recipient. Now, these are those rules for specific cases. Now here, whenever you have to make proportion of the service, why? Because it is spread across multiple states. For proportionating, you'll require some ratio. What is that ratio? So first, what is a service? Service is relating to goods or individual. That is where the goods have to be present or the person has to be present. In this case, how to make proportionate if the service is spread over multiple states? So first is services relating to goods. Equally dividing the value of service in each of the state where the service is performed. Service supplied on different goods, considering the ratio of invoice value in each state or union territory on which service is performed as the ratio of the value of service performed. So where the same goods are being sent to different states and some part of the process is performed on the goods in different states, then you will divide the value of the service equally. But where services are provided on different goods, so in different states there are different goods, in that particular case, you will take the value of goods in each state and that value will form the basis for apportioning the ratio of service. Next, where services are supplied or to be performed on some individual, then you have to follow the generally accepted accounting principle. So no specific ratio is given here. Next, where the service is relating to immovable property, it will be apportioned in the manner which is applicable for determining the value of service in 12.3. So what we studied in 12.3, so where the boat is moving from one place to another, you will go by the time spent in each territorial waters. Where a property is spread between two states, you will go by the ratio of the area of the property. Next, where the service relates to admission to an event, it will be in the same manner as is applicable for determining the service in case of 12.7. Now, what is the default provision? That is where any of the above specific situation is not applicable. So you are given a general rule, a default rule. What is the default rule? Where the address of the recipient is available in your records, in the ordinary course of business, it will be the location of the recipient. So if the recipient's address is not available, then it will become the location of the supplier. But if recipient's address is available in your books, in your records, it will be the location of the recipient. Then we come to 13 bracket 13. This is covering again a specific type of service for which a specific place of supply is notified. First service is service of research and development. Which research and development? Related to pharmaceutical sector, supplied by a person who is located in India to a person who is located outside India. So taxable territory, whenever the law uses the word, it means India. Non-taxable territory means outside India. So as we have seen, nowadays India is becoming the pharmaceutical hub, but here it is not the manufacturing of the medicines. Here it is the R&D. So if you know, during COVID, we had done a lot of R&D and we had provided our R&D to foreign countries so that they can use our R&D to make the vaccines over there. In such cases, the place of supply will be the location of the recipient, so it will be outside India. Next, B2B maintenance, repairs or overhaul service of aircrafts, aircraft engine components or parts. It will again be the location of recipient. So let us say you all would be knowing that many of our aircrafts are all made outside India, in US, etc. So when we send our aircraft there for repair work, the place of supplies location of recipient only, that is India, and not the place where the aircrafts are sent. Next, B2B, MRO services of ship and other vessels, same rule, it is the location of the recipient. So students, these are some important categories of place of supply. Now I would like to take you to the amendments that are there relating to each of these chapters. So we'll just run through them so that amendments are covered. So right now we are doing amendments made by Finance Act 2025. So there is an amendment in the definition of local authority. So as you can see, the local authority definition, which was there in the pre-amended provision, is also there in the post-amendment provision with one important change. What is that change? So what is local authority? So one is local authority is the panchayat, the municipality, the municipal committee, etc. Most important part is this, which is entrusted by the central or the state government with the control or management of a municipal fund. So this word fund is added, and what is the explanation added? For the purpose of this subclause, the local fund means fund which is under the control management of the authority of a local self-government, which is established for discharging civic functions in relation to a panchayat area. Municipal fund again means a fund under the control management of the local authority or the local self-government established for discharging civic functions in relation to the municipal area. So in simple words, the amendment is that now who will be called as a local authority? That municipality, that local government who is given a fund and who has the complete control about the management of that fund, that will be considered as a local authority. That's it. So this is the amendment in this chapter. Okay, no amendment here. Fine, no amendment here also. ठीक है. Now we have some time, so let me take one or two cases from here. So let us take the first case. XYZ Limited, registered in Rajasthan, receives legal service from an attorney in UK who is not a related person in relation to registration of trademarks in UK. The consideration of 8,000 UK pounds was paid by the company to the attorney in UK. Determine the place of supply. So students, first you have to test whether it is section 12 or 13. Because for place of supply of service, we have two sections. One is section 12, one is section 13. When 12 applies, when both location of supplier, location of recipient, both is India. But here, since one of the location is outside India, it becomes section 13. Now, in case of section 13, we have to determine whether there is a specific rule or this will fall in the default rule. Now, specific rules, as you see, is where goods, where some services to be done on goods or on some individual. Is this the case? No. Is it immovable property related service? No. It is some banking finance related service? No. Is it some event organizing related service? No. Is it passenger transport service? No. So if you'll see, none of these specific services are covering this. In short, this falls under the default rule. Now, what is the default rule? So the default rule is that the place of supply of this service will be the location of recipient if the recipient's details are available on record of the supplier. Now here, who is the recipient? Recipient is XYZ Limited, who is registered in Rajasthan, that is from India. And the services are provided by the attorney in UK, that is the lawyers of UK. Now, from the details which are there in the question, we can very safely assume that my address, that is the recipient's address, would be available on records of the supplier, because when they are providing legal services, they will definitely require my basic details. So my address will be available on the records of the supplier. In this particular case, the place of supply will fall in the default rule, which is the place of the recipient. Where is the recipient? Recipient is in India. So this becomes the place of supply, that is India, assuming that my address is available on records because it is a lawyer service and technically they will be having my details with them. Now, the moment we conclude that the place of supply of this service is in India, now we'll have to check whether this falls in the definition of import of service, because we are also asked to determine whether there will be RCM. Now, whether this falls in the definition of import of service. So for import of service, there are three conditions given. See, export has 5 conditions, import has only 3. Supplier should be outside. In our case, supplier is in UK, outside. Tick. Recipient should be in India. The recipient is in Rajasthan, India. And third, most important condition, the place of supply of this service should be India. Now we have just applied section 13 default rule, because of which the place of supply is fitting in India. Now the moment we conclude that the place of supply of this service is in India, all the 3 conditions required for import of service are satisfied. And since all the 3 conditions are satisfied, we can conclude that this is import of service and hence leviable to GST under RC. Correct, students? Yes, perfect. So, Umang, I hope your point is clarified. So, place of supply is in India because the recipient is in India, and hence it will become import of service as per the definition of import of service, and hence it will be leviable to GST under RCA. Fine. So, students, I've covered all the three chapters. I've tried to cover all the provisions, rather we have covered all the provisions. Now, your role is to go through all these question answers from all the three chapters. Few I have covered in the class, many you have by yourself. Plus, also go to the institute's other material that is available, that is MTP, RTP. It will add great value to your understanding. Plus, it will be very helpful for your exams because all the questions over there are in the same pattern in which you get the questions in exam. So it will be a very good preparation for your exams. Kindly do that before our next class so that in case there is anything pending which you have not understood from any of these three chapters, I'll first take up that in the next class and then I'll take up the next further chapters for revision. So with this, students, I conclude today's class. So thank you very much. Thanks for being so active and responsive throughout the class. And please keep studying. Good night, everyone. Ashok ji, good night to you also, sir. Thank you, Ashok ji.